How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex and we're going to be going over a really nice options strategy on SOFI Technologies. And this stock recently has been beaten down pretty heavily by earnings. They didn't report very good earnings, and that's why the stock is tanking. But this provides a really nice opportunity for people who are long term on this stock. It's sitting at a nice price point of around $15 per share, and right before earnings, it was sitting at $17.47. So that's about a $2.50 drop, pretty significant. And I know a lot of people see this as a really good opportunity to buy for the long term because the stock is on discount and it's at a great price. So let's get into what, first of all, this company does. They are they provide financial services such as home loans, personal loans, school loans, as well as credit cards. You can visit their website. They have a ton of services that they offer. As you can see, you can even invest. You can invest in automatic investing, active investing, IPOs, retirement accounts, cryptocurrencies. They even have fractional shares, which not a lot of brokerages offer. In ETFs. They also have a lot of guides on their investing. So you can also get personal loans. They have savings accounts, checking accounts, credit cards, insurance, credit scores, budgeting, auto loan refinancing. They provide a lot of services. They have over 2 million members. You earn points. You can get lots of benefits from that. And they are focused on a mobile experience. All their services work in this one app, and they're very proud of it. And they are constantly working to improve the performance of their app. So really great company for the long term, very up and coming, and it's really great for beginners, especially people who are on the go and like to use mobile apps. But let's get back into a nice options play on this stock. As we can see, it's been pretty flat right after earnings, sitting at a nice floor of $15 per share, and that provides a really good opportunity for option strategies that require the stock to remain flat, or at least in the price range. If we take a look at the technical analysis on the SoFi stock, it has a really nice support at this $14.50 mark right here. So we're going to be using that price point as a nice, as a really nice dip buying opportunity, but also for people to sell options. And there's a lot of option strategies that you can use on this stock. If you hold 100 shares of SoFi, you could sell some covered calls, but you won't receive that much premium. But a lot of people aren't really in the stock yet, or have already sold out, because I know this this dip scared a lot of investors, so they sold out of the position. But don't worry about the long term if you believe in the company. So some really good strategies include selling cash secured puts at the $14.50 strike, as well as iron condors or put credit spreads. So those are going to be some really nice option strategies, and I can't see this stock falling too much more. It's had a really bad tank, and it's having a really nice support at this $15 mark. But as we saw earlier, there's some really strong support at this $14.50 mark. So we're going to be using that price point as our strike price. So let's head over to the options chain on SoFi, expiring August 20th, which is next week. And we're going to play some really nice options. So as you can see, I'm selling a cash secured put at the $14 strike price, but I do recommend this $14.50 price just because there's a really strong support at that $14.50 price point. And if it does manage to hit that, it will likely bounce back because a lot of people see it as a really good dip buying opportunity. So we can sell a cash secured put. It will require $1,400 of collateral, and we will receive a minimum credit of $37 in just 1 week. Let's take a look and calculate what the return is going to be on this investment. It's going to be $14.50 minus our premium we're collecting, which is $37. And we're going to have a collateral to put down of $1,413. So we're going to be doing 37 divided by 1413, and that's about a 2.6 return in just 1 week. Really good return for a weekly option. Of course, it does require $1,400 in collateral, but you are making 2.6 return, which is really nice. Most savings accounts don't even make that in a year, so it's a really nice return just for a short amount of time. Of course, if you want to be safer, you could do the $14 strike. That's a little bit too safe, but so I do recommend this $14.50 strike price. I know I will personally be selling one more of these at this strike price next week. Really good chance for profit, as well as a really nice premium and return on your capital. If you have a really small account, you could sell some put credit spreads. What this will look like would be selling the $14.50 strike price and then buying the $14 strike. And remember, we're going to be buying and selling puts. So this is what our strategy is going to look like. We're selling the 14.50 strike and buying the 14. This should not say short put. Robinhood is probably glitching. Just ignore that. The strikes look nice, as well as the buy and sell correct, and we'll receive a total credit of $16. So this is going to provide a really nice return. And what's really good is the bid and ask spread is really tight, which means that it's going to be easy to get filled on this put credit spread, and it's also going to be easy to close out of it when you want to, which is what we're looking for when we're selling spreads. So this is going to be the strategy right here. It does say short put because I already have a cash secured put that I'm selling, so it's canceling some orders out, but just ignore the name. This is a put credit spread. If your strikes look like this, selling to open the 4.5 and buying to close the well, it's buying to close because I already have one, but yeah, this is what we want. We're buying the $14 and selling the 14.5, receiving a credit of $16, collateral of $50. So for the profit, we're going to be taking a look at the collateral we're going to be putting down is $50 minus 16 because we're receiving $16 credit. You only need $34 of collateral to put down, and we're receiving $16 of credit divided by the collateral, and that's going to be a 47% return in just 1 week. Really great return if you are willing to take a little bit of risk. But as we saw in technical analysis, really strong support at the $14.50 level, and selling the strike is going to be pretty profitable. You're pretty much almost doubling your money in just 1 week. So that is going to be really good strategy here. As we see here, it's a 47% return on your money. So it's really, really strong, really good. So that is 2 strategies that we can do. And if you want, you could also just straight out do an iron condor. We're going to be doing these strikes also. And then we're going to be buying probably the $16 strike and then buying the 16.5 strike and then selling the $16 strike. As we can see, we're going to receive a credit of now we're receiving a credit of $24. Really, really strong credit on your collateral, which is going to be $100. This is going to be about 100 minus 24 divided by 76. 24 divided by 76 is going to be 31.5% return. Yeah, I would just stick with the put credit spreads. There's not much credit on the call side, as we can see here, and it's been beaten down pretty bad, just because a lot many people are buying calls on this stock. So if you are on the stock long term, you could buy some really far out of the money leap options, because the call premiums are going to be pretty low. So yeah, we're not going to be doing an iron condor on the stock, just some put credit spreads, which is going to be pretty profitable because of how much premium there is on the put side of these contracts. So that's about it for this video. Two nice option strategies for you guys on this stock. Technical analysis shows that there's some really strong support at this 14.5 level. So we're going to be using that to our advantage in selling some options. So comment down below if you want more videos like this, some really good strategies, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.